Hello everyone, welcome to Tesla Daily News. Today is May 23rd, Saturday, and the following is the latest Tesla news. According to market data, Tesla shares closed at $426.01, up from the previous close of $417.85. That is a gain of about 1.95% on the day. The stock opened at $422.67, reached an intraday high of $431.51, and traded as low as $420.51. Volume came in at about 45.94 million shares, suggesting active participation but not necessarily panic buying or panic selling. The short technical view is, bullish candle confirms momentum, support 420, resistance near 432 today. For Tesla investors, the price action matters because the company is currently sitting at the intersection of several major narratives: autonomous driving, robotaxi safety, international electric vehicle demand, brand perception, and Elon Musk's broader business empire. A close above the open, with the session finishing closer to the high than the low, usually tells traders that buyers remain engaged into the end of the day. The area around $420 now becomes a near-term support zone to watch, because that was close to the day's low. If Tesla can hold that level during any pullback, momentum traders may see it as confirmation that buyers are defending the stock. On the other hand, the $431 to $432 area is the immediate resistance zone, because that is where the stock ran out of steam during the session. The broader investor question is whether this move reflects confidence in Tesla's long-term autonomy story, a rebound in growth expectations, or simply market-wide risk appetite. Tesla remains a stock where headlines can quickly change sentiment. Safety reports around full self-driving and robotaxis can pressure the valuation, while competitor setbacks can strengthen the argument that autonomous driving is difficult for everyone, not just Tesla. Sales data from Europe can also shape the debate around whether Tesla's vehicle business is still growing fast enough to support its valuation. So today's positive price move is encouraging for bulls, but the news flow remains mixed. According to FNP and OP Online, newly unredacted Tesla crash reports submitted to the U.S. National Highway Traffic Safety Administration have raised fresh questions about Tesla's robotaxi safety systems and the company's transparency. The reports concern 17 robotaxi-related collisions in Austin. 4 months, Tesla's crash filings reportedly contained heavy redactions, while competitors such as Waymo, Zoox, and May Mobility provided more detailed descriptions. In May 2026, Tesla lifted the redactions, and the newly visible details show incidents involving both autonomous system limitations and human teleoperator intervention. This is the most important Tesla-related story for investors today because it goes directly to the company's highest value narrative, autonomy. Tesla's market valuation is not based only on how many Model Ys or Cybertrucks it sells. A major part of the bull case is that Tesla can eventually operate a large-scale autonomous driving network, unlock high-margin software revenue, and compete in the robotaxi market. If investors begin to believe the technology is less safe, less scalable, or less transparent than advertised, that can directly affect valuation multiples. The reports described 2 especially sensitive cases in which human remote operators were involved. Tesla reportedly uses teleoperators who can take over robotaxi vehicles remotely at low speeds, under 16 km per hour. In one case from July 2025, a remote operator allegedly guided a stationary vehicle over a curb and into a metal fence, leading to a hospital visit for the onboard safety attendant. In another case from January 2026, a remotely operated Tesla reportedly hit a construction barricade at about 14 km per hour. The second incident caused property damage but no major injury. Why does this matter? Because teleoperation is supposed to be a safety fallback. If the autonomous system becomes confused, a human operator can step in. In theory, this reduces risk. But if the fallback itself produces crashes, regulators and investors will ask whether the whole operating model is robust enough. A robotaxi system needs multiple layers of safety. The core driving software must perform reliably, the sensor and perception stack must detect unusual hazards, the vehicle must respond conservatively, and any human backup system must be effective. The weakness in any one layer can create regulatory friction. The reports also described incidents involving perception problems. In September 2025, a Tesla robotaxi reportedly turned into a parking lot entrance at low speed and collided with a stretched metal chain. In October 2025, a Tesla vehicle side mirror reportedly touched a protruding trailer hitch during a left turn. These are not high-speed highway disasters, but they are meaningful because autonomous systems often struggle with static objects in unusual positions. A human driver might instantly understand that a chain across an entrance is a barrier, or that a trailer hitch is sticking out into the driving path. A camera-based system has to interpret the object correctly under real-world lighting, angles, and context. The reports say that of the 17 crashes, most involved property damage only. Several crashes were apparently caused by other drivers hitting stationary Tesla vehicles, which is important context. No autonomous vehicle operator can prevent every rear-end collision caused by another human driver. Still, one reported hospital case and several unusual low-speed incidents are enough to keep regulators attentive. For Tesla enthusiasts, this is a reminder that autonomy progress is not a straight line. Tesla has always taken a different path from companies like Waymo. Tesla relies heavily on a vision-based approach and aims to scale autonomy through vehicles already on the road. Waymo uses a more sensor-heavy approach, including LiDAR, and has rolled out in more tightly controlled geographic areas. Tesla's strategy could scale more quickly if it works, but it also faces intense scrutiny because it is ambitious and less conservative. For stock investors, the key question is whether these reports create a temporary public relations problem or a deeper regulatory risk. If regulators ask for more reporting, more testing, or more operational limits, that could slow Tesla's autonomy timeline. If the incidents are seen as normal early-stage testing issues, the market may look through them. The transparency issue may matter as much as the crashes themselves. Investors generally prefer bad news disclosed clearly over bad news hidden until pressure builds. The fact that competitors were described as more transparent could become a talking point for critics. The practical takeaway is that Tesla's Robotaxi progress remains central to the investment thesis, but investors should track NHTSA filings, state-level Robotaxi permissions, and any future disclosures from Tesla. A single report rarely changes the entire story, but a pattern can change market confidence. Tesla bulls will argue that every autonomous driving company has incidents and that Tesla's fleet learning advantage remains powerful. Tesla bears will argue that the redactions, teleoperation crashes, and perception failures show that the technology is not ready for broad deployment. The truth for investors may depend on how quickly Tesla improves the system and how openly it communicates. According to Reuters, via The Star, Alphabet's Waymo has temporarily suspended freeway robotaxi rides in the United States and paused its Atlanta operations while it updates software related to construction zones and flooded roadways. Waymo said freeway operations were paused while the company integrates recent technical learnings into its software, and it expects to resume those routes soon. Freeway trips have been available in San Francisco, Los Angeles, Phoenix, and Miami. The Atlanta pause followed an incident in which an unoccupied Waymo robotaxi stopped in flood water. This story is very important for Tesla investors because it provides competitive context. When Tesla faces scrutiny over autonomy, investors often compare it with Waymo. Waymo is widely viewed as one of the most advanced robotaxi operators in the United States. If Waymo also has to pause service because of difficult edge cases such as construction zones and flooding, that supports the argument that autonomy remains hard across the entire industry. In other words, Tesla's problems are not happening in a vacuum. Waymo's pause followed a recall of about 3,800 robotaxis earlier this month, after the company identified a risk that vehicles could enter flooded roads with higher speed limits. That is a highly specific problem, but it highlights a broader autonomy challenge. Vehicles need to understand not just the road, but also changing road conditions. Flooding can distort lane markings, hide curves, change friction levels, and create uncertainty about depth. Construction zones can introduce temporary signs, cones, workers, unusual lane shifts, and unpredictable human behavior. These are exactly the kinds of edge cases that separate a good demo from a safe commercial robotaxi service. For Tesla, Waymo's pause can be interpreted in two ways. The bullish interpretation is that even the industry leader has setbacks, so Tesla's own challenges should be expected and should not be overreacted to. If Waymo needs recalls and pauses despite using LiDAR and operating in mapped areas, then Tesla's camera-first strategy may still have a chance to compete if it can solve edge cases at scale. The bearish interpretation is that if Waymo, with years of commercial robotaxi experience and a more conservative technical architecture, still needs to suspend some services, then Tesla's broader autonomy ambitions may be even harder to execute. From a market perspective, this Waymo story may reduce the relative damage of Tesla's unredacted crash reports. Investors can see that autonomy is still a developing technology for everyone. However, Waymo's approach to communication is also important. The Reuters report quotes Waymo explaining the pause and the technical reason behind it. Transparency can preserve trust even when problems occur. Tesla will face pressure to match or exceed that level of clarity if it wants regulators, customers, and investors to believe in its Robotaxi roadmap. Tesla enthusiasts should watch this closely because Tesla and Waymo represent two different philosophies. Waymo is cautious, geographically limited, and sensor-rich. Tesla is broad, software-driven, and tied to consumer vehicles. If both systems encounter problems around construction and flooding, then the winner may not be the company with the best demo, but the company that can identify edge cases fastest, update software safely, and maintain public confidence. The Robotaxi race is not just about artificial intelligence. It is about operations, regulation, insurance, customer trust, and crisis response. According to HNA, the most popular electric car in Germany during the first 4 months of 2026 was not a Tesla or a Volkswagen branded model, but the Skoda Elroq. Based on data from Germany's Federal Motor Transport Authority, the Skoda Elroq recorded 13,740 new registrations from January through April. The VW ID.3 followed with 11,676 registrations, while the Tesla Model Y came in behind with 11,268 registrations. This is a meaningful story for Tesla investors because Germany is one of Europe's most important auto markets, and Tesla has a major manufacturing presence near Berlin. The Tesla Model Y has been a dominant electric vehicle in many markets, but this data suggests that competition in Europe is intensifying. Skoda, Volkswagen, and other European brands are not standing still. They are offering more electric SUVs and hatchbacks that appeal to local buyers, often with strong dealer networks, familiar brand identities, and competitive pricing. The April-only data was slightly different. In April, the VW ID.3 LED with 3,518 units, while the Skoda Elroq recorded 3,341 units. But looking at the first 4 months of the year, the Elroq remained the top electric model. In the overall German new car market, including all powertrains, the Elroq ranked 7th from January to April, making it the highest-placed pure electric vehicle in the broader ranking. The VW Golf still led the overall market with 29,325 registrations, followed by the VW T-Roc and VW Tiguan. For Tesla, the key point is not that the Model Y is failing. More than 11,000 registrations in 4 months remains a strong result. The issue is that Tesla no longer has the field to itself. Buyers now have credible alternatives from traditional automakers. In Europe, consumer preferences often differ from the United States. Brand loyalty, vehicle size, interior design, service access, company car policies, and government incentives can all affect buying decisions. Tesla's direct sales model and software-focused brand remain powerful, but traditional automakers are closing the gap in product availability. The HNA report also highlighted Chinese automakers in Germany. BYD recorded 13,825 new registrations from January through April, MG Rowe reached 9,004, Li Motor reached 4,523, and Xiaopeng reached 1,802. Together, Chinese automakers reached around 30,000 registrations, equal to about 3.2% market share. That remains small compared with Volkswagen's 18.7% share, but the direction matters. Chinese brands are becoming more visible in Europe, and many are willing to compete aggressively on price, features, and battery technology. An important nuance is that not all Chinese brand sales were pure electric vehicles. MG Rowe sold many combustion or hybrid models, and more than half of BYD's German sales were reportedly plug-in hybrids. That matters for Tesla because Tesla does not sell hybrids. Tesla competes only in the pure battery electric category. If government incentives support plug-in hybrids, or if consumers remain cautious about full electrification, Tesla may face a disadvantage in some customer segments. On the other hand, Tesla's pure EV strategy keeps the brand clear and aligned with long-term electrification. For investors, the Germany data raises questions about Tesla's volume growth and pricing power in Europe. If competitors gain share, Tesla may need to respond with discounts, financing incentives, refreshed models, or new lower-cost vehicles. Price cuts can support delivery numbers, but they can pressure automotive gross margins. Tesla's long-term valuation depends not only on selling vehicles, but also on maintaining healthy margins while funding autonomy, energy storage, robotics, and AI development. For Tesla fans, the Model Y remains one of the most important electric vehicles in the world. But this report is a reminder that the next phase of the EV market is more competitive than the early phase. In the early days, Tesla often won because it had the best range, charging experience, software, and brand excitement. Today, the market is broader. Many buyers are choosing based on total cost, design, comfort, local availability, and incentives. Tesla will need to keep improving the ownership experience, not just the technology. According to FNP, a Tesla Cybertruck owner in Texas drove into Grapevine Lake after apparently misunderstanding the vehicle's Waymo function. The driver reportedly told police that he intentionally drove the Cybertruck into the lake to test the feature. The incident ended with the vehicle disabled and filling with water. The driver and passengers escaped, firefighters recovered the truck, and the driver was arrested. This story is less important to Tesla's financial model than Robotaxi safety or European sales, but it matters for brand perception and customer education. The Cybertruck is one of the most visible vehicles Tesla has ever built. It attracts attention everywhere, and every unusual incident quickly becomes viral content. In this case, online commenters mocked the driver, with jokes about needing a submarine mode, putting the vehicle in rice, or remembering that he was not James Bond. The technical detail is important. Tesla's Waymo is a real Cybertruck feature, but it is not a license to drive into a lake. According to the article's description of Tesla's manual, Waymo is designed for crossing waters such as streams or shallow rivers under controlled conditions. The cited limit is a maximum water depth of 82 centimeters, measured from the bottom of the tire, and a very low speed of 2 to 5 kilometers per hour. The mode must be manually activated through the off-road app. It raises ground clearance and increases high-voltage battery pressure to help protect against water and dirt intrusion. But it remains active for a maximum of 30 minutes, and Tesla tells drivers to check water depth before entering. Water damage is not covered by warranty. For Cybertruck enthusiasts, the lesson is simple: capability has limits. The Cybertruck is designed to be rugged, but it is not a boat. Off-road features can make a vehicle more capable, but they do not eliminate physics, legal restrictions, or common sense. Water depth can change quickly. Lake bottoms can be soft or uneven. Electrical systems and battery protection are engineered for specific conditions, not reckless stunts. For investors, this type of story usually has limited direct impact. One driver's misuse of a feature does not say much about Tesla's engineering. However, viral Cybertruck incidents can shape public perception. The Cybertruck is already polarizing. Supporters see it as bold, futuristic, and uniquely Tesla. Critics see it as excessive, impractical, or a magnet for embarrassing headlines. When an owner misunderstands a feature and has to be rescued, it feeds the critical narrative. Tesla can reduce these risks through clear in-vehicle warnings, better owner education, and careful feature naming. The name Waymo is accurate for shallow water crossing, but some drivers may overestimate what it means. This is similar to the long-running debate around the names autopilot and full self-driving. Tesla often uses ambitious branding that excites customers, but ambitious branding can also create misunderstanding if customers do not read the limitations. The Grapevine police reportedly emphasized that just because a vehicle may technically be able to cross water does not mean it is legal or safe. That point matters. Off-road capability does not override local laws. Driving into public waters can create environmental, safety, and rescue costs. If Cybertruck owners treat the vehicle as a stunt platform, Tesla may face more viral headlines even when the company itself is not at fault. According to the Miami Herald and The Street, Elon Musk and Sam Altman's long-running conflict over OpenAI has shifted from the courtroom toward Wall Street. A federal jury in Oakland rejected Musk's lawsuit against Altman and OpenAI on statute of limitations grounds, meaning the jury did not decide the deeper question of whether Musk's charitable trust claim had merit. Musk criticized the result as a technicality and has vowed to appeal. This story is Tesla-adjacent rather than directly about Tesla vehicles, but it matters because Elon Musk's business empire affects Tesla investor sentiment. Musk is CEO of Tesla, SpaceX, and XAI, and his public conflicts can influence how investors think about management focus, capital allocation, and the broader AI race. Tesla's future increasingly depends on artificial intelligence, including autonomous driving, robotics, and data center scale compute. So Musk's AI battles outside Tesla can still affect how investors interpret Tesla's direction. The report says Musk and Altman co-founded OpenAI in 2015 as a non-profit intended to develop artificial intelligence for the benefit of humanity. Musk left the board in 2018 after a power struggle and later launched XAI in 2023. In 2024, Musk sued Altman, accusing him of abandoning OpenAI's founding non-profit mission. The jury's decision turned on timing, not the philosophical dispute. That means the public battle is unlikely to disappear. The Wall Street angle is potentially more important. The article describes SpaceX, which reportedly absorbed XAI in a massive merger, preparing for a possible public offering, while OpenAI may also consider going public. The details in the report include extremely large valuation figures and potential IPO timing. Investors should treat such claims carefully unless confirmed by official filings, but the broader point is clear. AI infrastructure is becoming a capital markets contest. For Tesla shareholders, there are several angles to watch. The first is management attention. Musk's defenders argue that his work across companies creates cross-pollination. SpaceX, XAI, and Tesla all benefit from engineering talent, manufacturing ambition, software development, and AI infrastructure. Critics argue that Musk is spread too thin, and that legal fights, social media disputes, and outside ventures distract from Tesla's execution. The second angle is AI competition. Tesla wants to be seen as an AI company, not just an automaker. But public markets now have several AI stories to choose from, including OpenAI, Anthropic, XAI, NVIDIA, cloud providers, and autonomous driving firms. If investors can buy pure AI exposure elsewhere, Tesla may need to prove that its AI applications produce real revenue, not just future promises. Robotaxis, full self-driving subscriptions, Optimus robots, and energy software become more important in that context. The third angle is capital. AI development is expensive. Training frontier models and building inference infrastructure can require enormous spending. If XAI and SpaceX pursue public market capital, that could support Musk's broader AI ambitions. But Tesla investors will ask whether Tesla receives enough direct benefit. Tesla has its own AI needs, especially for autonomy and robotics. If the best AI resources sit outside Tesla, shareholders may question alignment. If Tesla gains access to technology, talent, or infrastructure through Musk's ecosystem, bulls may see it as an advantage. The fourth angle is governance. The article mentions a dual-class structure for SpaceX that would preserve Musk's voting control. Tesla investors are already familiar with the trade-off. Musk can create enormous value, but shareholders also accept concentration of influence and headline risk. As more Musk-led entities compete for investor attention, Tesla's board and management communication become even more important. For enthusiasts, the Musk-Altman story is part of a larger philosophical debate about artificial intelligence. Who should control it? Should it be non-profit, for-profit, open, closed, centralized, or distributed? Tesla sits inside that debate because its vehicles collect real-world driving data, its FSD system applies AI in physical environments, and its Optimus robot project could eventually bring AI into factories and homes. Whether investors love or dislike the drama, AI is now central to Tesla's identity. Putting today's news together, Tesla remains a company with powerful upside narratives and significant execution risks. The stock closed higher, showing that investors are still willing to buy the name despite critical headlines. The unredacted crash reports create pressure around Robotaxi transparency and safety. Waymo's freeway pause shows that even leading competitors face difficult autonomy problems. Germany's registration data shows that Tesla's EV competition is becoming more serious in Europe. The Cybertruck Lake incident is a reminder that customer misuse can damage brand perception. And the Musk-Altman fight shows that Tesla's AI story is connected to a much larger battle for capital, talent, and public trust. For stock investors, the immediate levels to watch are the $420 support area and the $431 to $432 resistance area. Beyond the chart, watch for any Tesla response to the NHTSA-related reporting, any new Robotaxi updates, European delivery trends, and signs of pricing pressure. For Tesla fans, today's news shows why the company remains fascinating. No other automaker generates this mix of technology, controversy, competition, and market-moving ambition. Thank you for listening to Tesla Daily News. If you enjoyed this episode, please subscribe and stay tuned for the next update.